It's me, Pavitran here. We're going to discuss a weekly forecast of crude oil. What are the levels we should be watching out for the coming week? Last week, a small recap of what are the levels which I given last week and how the performance has been. I had just given the range below 37.0 level. If a strong close happened on a 4-hour candles or even a daily candle close below that region, then 34.80 and $30 level is on cards. But to our not to our expectation, there is not been no close below that region. And at the next region which I given somewhere around 41.50, that was the maximum region or the big range which I have given from 37 to 41.50. The big range, if it closed either below that or above that, then we can be able to see some rally happening on whichever side the market has been closed. And the small range which I given is 37 to 39.30. If the market has closed strongly on 4-hour candles for above 39.30 level, then there is a possibility of touching 41.50 is on the cards. So these are the levels which I had given. Let's see what had happened at opening somewhere around the 29th of July. You can see a mild negative opening. That was to our expectation because we were in bearish channel, right? It was clearly forming. This was the recent lower high, this was the recent lower low, and it took resistance lower high, then it came all the way, it had formed a recent lower low, and it went again, took resistance at 39, then it closed somewhere around here. So that was clearly and a lower high, a lower low, and a lower low, lower high. It's a clearly great sign for bear market. It's kind of a bearish channel. What had happened exactly at 11:30 in the morning, a bull confirmation candle came. So when you look at the RSI, it clearly stated that it was shifting its range. Yep, this is the range. This is the kind of a range shift which has happened over that place. I'll give it a zoom. Yeah, this is the place. As you can see, a bull confirmation candle had happened at 11:30, and after that, see at exactly price RSI took support at 40 and it started to go. So that is a kind of a range shift I have been saying that had happened over there. What is range shift in RSI? Right now, RSI was trading somewhere around bearish modes from 60 or 70 to 20 odd levels, and nearly at 29 RSI was not crossing below 40. That's clearly indicating us that bulls are trying to come into the market. And if our RSA has taken support at 40, that clearly means that we should not be creating any fresh short positions. If you had created any fresh short positions, then that is a good place to book your profits, or you can trial with the previous lower high, that is somewhere around 39 or even 39.38.50. It's even a good position to trail, but it will be a very tight squeeze. We should not, when RSI range shift is happening, it is clear that we should not create any fresh short positions over this region. That doesn't mean that we should initiate long position. RSI is mentioning to us that don't be so much bearish, don't be a strong bearish. Bulls are trying to come into the market. It's giving an indication that bulls are trying to come into the market. Be aware of it. That's the indication. And since I'm an intraday player, I know where to put my stop loss. So I have initiated the trade over that region, and trade went well. But if you are in a weekly or a positional guy, we should not create any long, because as I suggested, we should be looking for a breakout below 37 point, close below 37, maybe around 4 hour candle close or a daily candle close. We have to wait for that. That's our confirmation. In the meantime, we are just looking at what is the channel it is making, or what is the actual market sentiment it is trying to make. So when we look after on Tuesday, it had clearly formed an higher low. This was the lower low and this was the lower high. If market has closed below this recent lower low, then we can see that market will be bearish. Market is trying to sustain below the recent lower low, but instead market was trying to make a higher low, which clearly is a one indication that bulls are in the market. And the second indication that it clearly gave us an hint is that this was a lower high. The lower high was breached, so market is now trying to turn into an bullish channel. Consider this as an higher low, consider this region as an higher high. So market will be trying to form a bullish channel from here on until this bullish channel is taken out. This is an second indication for us. The third one is that RSI is clearly indicating here in this position itself. RSI started to indicate that don't be so much, don't be a strong bearish one, because buyers are trying to come into the market. So these three indication on Tuesday, it gave us a clear idea about how the bear channel is slightly turning into a bull channel. So on Tuesday, it was clear and obvious that it's buy on dip market. As you can see on 7:30, a good rally started. Till then, it was trying to sustain a range bound and a good region to buy. I mentioned somewhere around 38.50, but that did not came. Before that itself, at the 7 o'clock opening, American market opening, it had started to move in favor of the bulls, and after that, as usual, it started to consolidate and it started to fall from the next resistance, that is somewhere around 40.40 to 50 levels. So that is the place which gave a confirmation on a bear candle. That was a quite inside bar which had opened above, then it closed below the previous close. It's a kind of an inside bar to me, and that is a clear indication is that it has also happened at resistance. So we can just go for a shot with that candle high as a stop loss. Maybe the candle high somewhere around 40.555. If you had initiated position at 40.40 or 40.35 with stop loss of 20 or 30 cents, then you could have ride it till 2039 or whatever possible stop loss. It's for intraday, I'm speaking. You can just get somewhere around $1 to $2 even possible. So these are the regions where after getting a rejection from this region, we are just getting into a trade. We haven't predefining by placing sell order here and we are waiting for a market to turn. No, after confirmation from the candlesticks, we are just entering into trade. So even again in this region 39, maybe around it again took support in that region, then it started to try to go a little higher up. Then as usual, it is trying to face resistance at this region somewhere around to 40.40 to 40.50 level. So this is the play which has been happening last week, a complete range bound. There has been no good movement after Tuesday. It got completely stuck without volume, because as mentioned on Friday, a clear US holiday has happened, because there was no volume to support any of the movements from Thursday. So what are the levels we should be watching out for the coming week? Say this is the recent higher low, or you can even consider this as a recent higher low. I'll just mark it, it will be helpful for you. So this is the recent higher low which has formed here. So this recent swing uh, higher low has to be taken out. If this region is gets taken out, then we can expect to form a bearish channel. Right now, that is the play which we are going to see. Let's consider the situation. What is the range we should be taking into consideration? Is clear that again a strong close below 38.50. a strong close below 38.80 on a 4 hourly candle or a daily candle close, will we start to see some bears coming into the action. If a strong close happened at that region, that also clearly indicates us that this recent higher low will be taken out, then we will get we will form a lower low, so the trend will start to turn into bearish one. And if that is getting formed, then there is a possibility of range shift in RSI to this, it will be taking resistance at 60. So that is again a second indication for us. And if both indications happen, then the third indication is that lower high has to be formed. Either at maximum it can go till 40.40 levels, or even it can even take resistance somewhere around 39.302. So if three of this indication has happened in the market, if the three indication whatever I mentioned, if it is happening on a coming days, then bears will be in control of the market, or else then as usual bulls will try to take over the market, and they will try to keep on pushing above 41.50. If they are very successful in pushing above 41.50, then 42, 43, 45 is on the cards. Until then, a strong close above 41.50 is needed on a hourly, 4 hourly and daily candlestick close has been to, it has to close above that region. If it had failed to close, and if it is starting to give rejections, then it will be clear that it is starting to form a lower low and a lower high concept. A bearish channel will be in play and market will start to fall. What are the next important level you should be considering? Once 41.50 is taken out and closed, then as usual, if you can see, the psychological level will be around number of 45. So major target you should be focused on that, and between that to 42 and 43 will be a huge hurdle below that. And what are the levels we should be marked if it possibly start to making bear channel, is that once 39.30 is taken out, then we will start to form a bear channel. Again 37, as you can see previously it has taken support many times, 5 to 6 times it had taken support over this region. So again this region will again act as a strong support, and if it had acted as a strong support, then we can able to touch till 39.30. If again a range bound play may come into place, if at all a strong close happened below 37 on 4 hourly, then suddenly there is a chance of 34.80 is being taken out is possible. Why? Because 34.50 or 80, as you can see, this is the origin of the rally, previous rally. It has given a good support, and it has the origin of the rally has caused somewhere around 41.50. So a strong buying zone will be on that level. Once even that level is taken out, then it will be quite easy for us to reach 32, 31 and 30. So this is a clear market is trying to form a higher high, as you can see from here. Let me draw a trend line if that helpful. This is a recent we can't say recent, maybe around 28th of May it made low. So this is the region, it will be a strong region. This has to clearly get broken. Maybe this is the trend line will help us for better understanding. Yeah, that's fine. On 28th of May it has taken support, and at the 15th and 12th of June it has taken support over this region, and as usual at 25th is had taken support, and 29th also it has taken support. Most probably that coming week also it can able to take support. If this trend line gets broken, that is somewhere around as usual I said 39.30. So mostly it's a try it will be a confluence for us. If that trend line is gets broken out, then 39.30 is taken out, then RSI shifting its range towards 60, taking resistance at 60, then it will start to form, price action will start to form, and lower low and lower high concept. So this all a clear indication will be available for us. These are all we can add to that a solid confirmation one after the another. 38.50 is the level you should be watching out for, and once a strong close below that happen, then trend line will be taken out, and the bear channel will be in formation, and RSI will be shifting its range to 60 to 20. So bear channel is on the cards. Until then, if this trend line is still intact, or even if 39.30 is not taken out, then odds of breaking and forming new higher highs on the cards. So until then, what we should do, we have to wait whether if it's going to break 38.50, or it's going to break 41.40. If it has broken 41.50 and closed above that, then we should be aiming for 42 and 43, 44, 45, because we will be facing lot of resistance on these levels. And if it had closed below 38.50, then we will be starting to see a big bear channel. Maybe my expectation is that if it closed below 38.50, then 37 will be on the cards. If 37 is also taken out, then 34.50 will be on the cards. Even if 34.50 taken out, then 30 is on the cards. All should happen all on, maybe I'm expecting this should be happening during inventory, because last week inventory, it was a quite uh, a strange one, because data was purely negative, but market was trying to move up positively. That was so strange to me personally. I was expecting quite a drop from that region, and but that did not happen. This is the region. Inventory was coming during that time on Wednesday, around the 1st of July, and I was expecting a sharp drop in price, and it will start to form lower low, but the support and the bias around 39.30 levels are very strong. They are not letting market to fall below that. So this week, once it closes, I'm always in sell on rise mode, because I'm still not convinced that crude is fundamentally strong to go up. So until then, I will be on sell on rise. For the past 2 months, I've been saying I will be on sell on rise. On a weekly basis, I need a strong close below 38.50. So we should over taking position on a weekly basis. My kind advice is that wait for a candle close below 38.50, and if you want to go for long, just wait for a price action to confirm above 41.50. Until then, just play in the ranges. Don't be a buyer, don't be a seller. This is levels which we have been which I had in mind, and what is the forecast for coming week. So let's see how this week goes on. Until this trend line on 38.50 and 41.50 ranges is intact, then market will be in range. Once either 41.50 or 38.50 is taken out, we will see some quite a bit of action in crude in coming days. This week I'm expecting it to move a little wilder, because last week it was completely in range bound. Let's see what crude has in its bag this week. Thank you.